Hey, what's up, everyone? Welcome back to my world of stocks and welcome back to my 3 stocks on sale series for the month of May 2025. One of my favorite series on the channel, where I give you guys 3 new stocks every month that I feel look attractive at today's prices for the long term. And to give you some added variety, I specifically choose one lower risk, one medium risk, and one higher risk option to throw up on your watch list. As always, though, just please make sure to do your own research and make your own decisions. This year is going to be extremely volatile in the market, so make sure you stay on top of everything going on. And of course, I'll be here to help you all along the way, so make sure you subscribe to the channel and hit that like button to get more videos just like this. And thank you guys so much for that support. It means a lot to me, helps keep this channel alive, so I appreciate it. With all that said, though, let's go ahead and jump into my list here, starting with stock number 1, the lowest risk of the bunch. Well, this month I'm going with a clear choice in Amazon, ticker symbol AMZN, who, after seeing the stock lose more than a quarter of its value just in the past 3 months alone, it's become one of the most obvious buys on the dip for me right now. And I'll just give you 3 quick reasons why. Number 1, the dominance, and it's not even close. This is a company that is doing over $600 billion a year in sales. That's over $500 billion, and yet it is still somehow managing to grow at a double-digit rate. It's absolutely mind-blowing. But here's the best part. Their profitability is just getting started. Now, you look at it here. We're talking almost $60 billion last year alone. And it's funny because, investors will compare that to the $600 billion that they do in sales, and they'll say, well, that's really weak margins. But yeah, except that you're completely ignoring the fact that Amazon isn't even trying to be profitable. They're focused on taking over the world right now. So all their profits, or at least most of them, are really getting reinvested. And even then, they still managed to do $60 billion of pure net income profit. That's more than almost any other company in the entire world. And yet, investors are kind of nitpicking at it. And the crazy thing too is that this is really just the beginning for Amazon. They're just getting started on that bottom line, which also leaves giant room for growth. And it's why it almost doubled last year in size. I mean, that's incredible growth. So there's literally nothing really to complain about when it comes to Amazon's financials. I know people will find things. There's nothing to complain about. And the same goes for their business. That's number 2. Amazon has not only done such an amazing job of capturing the e-commerce market, particularly here in America, where you might as well just buy everything you need on Amazon at this point, because you'll typically get it within a day and for an even cheaper price than you'd pay at Target or any other local store, which I'm not saying that I'm a fan of. I actually like shopping in person, but the convenience and the low price points are just impossible to ignore at this point. And I even think it'll help them during this year's economic downturn too, with everything else going on. Investors are saying tariffs are going to kill Amazon. I'm not so sure about that, guys. I actually think more people are going to be shopping on Amazon than probably ever before, because they'll be looking for the cheapest prices around, and that's usually on Amazon, unless maybe you go on some, random Chinese app. But for the most part, cheapest prices usually on Amazon for most people. But then you add on cloud computing and digital advertising for much higher profit margins, and you just have the perfect trifecta of size, sales, and future profitability. And that's on top of everything else that they're investing into, like artificial intelligence, video streaming, EVs, autonomous driving, gaming, and much more. But then you package all of that up with a falling stock price. That's the bow on top. That's number 3, as the dip has even left them with a PE ratio that is 84% lower than their 5-year average, and a PEG ratio that is about the same as the sector median. Guys, you want to talk about low risk long term? I'm not talking short term, I'm talking long term. This is one of the easiest stocks to buy, in my opinion. I've been all over it this month. I'm going to continue to buy the lower it goes this year. All right, let's increase the risk a little bit for stock number 2. Still a strong option, but just, compared to Amazon, a little riskier. And that is the pharmaceutical giant Merck, ticker symbol MRK. Now, here's why I chose it. First of all, like Amazon, Merck is another stock taking a tumble recently, having fallen by 38% this past year alone, and it's down over 40% from the top. And just looking at that giant fall there, I mean, you go back like just a year ago, for so long, Merck had been known as one of the most reliable biotechs out there, pharmaceutical giants. Everyone wanted to own it, especially for the dividend, which I'll touch on in just a second. But just for the business alone, everyone knew that this is one of the best stocks to own in the space. And all of a sudden the price is falling now and everyone wants to jump ship. And look, I get it. I'm not trying to knock anyone for that. I just think it's funny how we sometimes call ourselves long-term investors, but we only love a stock when it's going up in price and we're quick to jump ship whenever it drops and theoretically would be getting more attractive, right? I mean, this should be the complete opposite where a stock is falling and we should be more interested in it because by the way, Merck's dividend yield is also rising the more that the price falls, having climbed now up to over a 4% yield, which is really the highest that it's been in over a decade. And the valuation is over 50% lower than the sector on PE and PEG ratios too, which is crazy cheap for a leader like this, who actually commands the third most market share in the entire world for pharmaceuticals. Now, granted, there are obviously some issues going on with the company here. You're not going to get a giant world leader like this on a stock crash if there was nothing wrong, no issues going on, right? There's got to be something. But it's really just like most pharmaceutical giants. It has to do more with the cyclicality of certain drugs losing patent protection that will eventually get offset by new treatments down the pipeline, assuming that, the company is run well, which I think it is. But anyway, I feel that this is the case with Merck. And the issue going on with them specifically is that they own the best-selling drug in the world in Keytruda, which is facing patent expiration a few years from now in 2028. So that's what everybody's so worried and afraid about. However, Merck is also making several moves to make up for that over time, like developing a subcutaneous version that will extend Keytruda's patent life well into the 2030s. They also received regulatory approval for a new pulmonary arterial hypertension drug last year. They signed an agreement to develop a weight loss medicine with China-based Hansoh Pharma. They signed new deals in Japan for key cancer treatments. They have tons of cash, allowing them to sign new licensing agreements with smaller drug makers too. And they spend some of the largest amounts of money among their peers on research and development. 2023, for example, was actually, I believe it was the most spent by any biotech in the entire world, which is also fueling their growing pipeline that has already grown to many dozens of programs that are working their way through trials. And they still have many other products and segments that are incredibly strong too, like in infectious disease, V-shots, and even animal health, which is expected to more than double in size over the next decade. All of which is why sales continue to climb higher and are expected to reach nearly $75 billion by 2027, with EPS breaking new record highs too. You add all of this up, and especially as a dividend kind of value stock, I think Merck is being just so heavily slept on in the market right now. And I don't really get it. I'm not really sure why, but I guess I don't really care at these levels. I'm going to continue to be a buyer regardless throughout this year. All right. While stocks 1 and 2 were actually fairly safe options, in my opinion, for the long term, stock number 3 is much riskier. I will admit that. And it's also a stock that I don't think I've ever even covered before on the channel, which makes it even riskier for me to be talking about it. But I just got to say, the more that I research them, the more that the price falls, the more interested I've become in it. And that stock is the mining and resources giant Albemarle, ticker symbol ALB, which is the largest lithium producer in the entire world. And yet, despite how important that element is for EVs, the stock has actually crashed by over 35% this year and even lost more than 80% of its entire value from the top, which is almost really mind-blowing to kind of think about. Now, there's several reasons for this giant crash, but among the biggest are 2 pretty evident ones. Number 1, there's obviously tariffs escalating right now, which would impact a global player like this immediately. A company like Albemarle that is selling raw elements and resources like that, minerals and stuff like that, to other nations. Well, it's a very obvious thing to be tariffing a physical good like that you sell in such giant quantities. Very easy to slap tariffs on that. So yeah, that's a big impact. Number 2, though, is also just the cyclicality of their business, given that lithium prices are down over 80% from their highs too, which correlates almost perfectly with ALB's stock price fall. However, there's also good reason to think that the company can actually, gradually rebound from these lows, as lithium is pretty much the backbone of a clean energy future. Every electric vehicle battery, and you think about the robotaxi market, how gigantic that's going to be over time, but also every solar energy storage solution, every smartphone, laptop, tablet, you name it, all of them are going to require lithium in even more of it in greater quantities over time. And while prices have crashed in the short term for lithium, which is actually pretty normal to follow such a giant boom like we had, well, the global demand for lithium is still projected to nearly quadruple by 2030, according to McKinsey analysts, who forecast more than 3 million metric tons of demand by the end of this decade, far exceeding supply, which I fully expect Albemarle to play a major role in providing much of that long term. Another positive to keep in mind is that ALB isn't just a lithium company, but also has other key businesses, including bromine and catalysts. The bromine division, for example, supports things like flame retardants for electronics and EV batteries, water treatment, and oil and gas drilling fluids, which is a pretty stable, high margin business with reliable cash flows, while their catalyst subsidiary called Ketgen also helps oil refineries operate more efficiently, especially in developing markets where gasoline and diesel are still critical. The business has taken a hit lately, but it's still an essential service that gives Albemarle some nice diversification beyond just lithium prices. And so in the end, I just think ALB looks to me like a bit of a beaten down stock with a business that still provides a very critical resource for the future, with other complementary divisions for balance and diversity, with expanding capacity, and to top it all off, they even pay one of the most attractive dividends that has been grown every single year for over 3 decades in a row, even through market downturns and other seasonalities. The only thing I wish for is that the dividend yield was a little higher, because it currently sits at just under 3%. And I like that to be a bit higher than that. But if the stock keeps falling, that yield will keep rising, and it's already among the highest levels it's ever been. So at some point soon, I might actually start dipping my toes into this global leader, as long as I acknowledge the risk that it comes with. Anyway, that'll do it for this month's episode. I hope you enjoyed it. And if you'd like to recommend any other stocks for future videos, let me know what you're buying yourself down below in the comment section. Thanks again for stopping by, my friends. I hope that you are all doing well, and I will catch you in the next one. All right, take care, everybody. Bye-bye.